S&P allegedly continued to rate hundreds of billions of dollars worth of CDOs backed by RMBS collateral, ignoring their own analysts' performance projections showing that the ratings on that collateral would not hold. The inaction that we announced today marks an important step forward in the administration's ongoing efforts to investigate as well as to punish the conduct that is believed to have contributed to the worst economic crisis in recent history.
That's Attorney General Eric Holder announcing today that the United States is suing Standard & Poor's rating services for misleading investors about mortgage-backed securities. Welcome to Lunch Break. I'm Kelly Grant, and here with the latest in this fast-moving story is WSJ Money and Investing editor Justin Baer. Justin, thank you so much for being here.
Sure, thank you.
So we've just heard that they are wrapping up this press conference now from a lawsuit announced late last night.
Correct.
Give me some of the details about what this means for the process and the consumer.
Sure. So this is a significant step for the ratings firms, really for the process of prosecuting the financial crisis, right? As the Attorney General just mentioned, this is a case that goes back to the events that led up to the crisis. S&P had put forth a number of ratings on bonds tied to mortgages. The government is arguing that they did that. They assigned these high ratings to these bonds, knowing that, of course, the underlying assets would not hold, and that they were
not just knowing it, but it sounds like joking about it too in some of these songs and videos.
Right,
and that's
right.
that's pretty damning, isn't it?
As you've come to expect with these suits, they were able to track down this trove of emails, and in one case, an audio, I think, performance of one analyst who was putting the subprime crisis to music, and so the government is alleging that they in fact knew that these bonds were not going to hold up in a way that deserved the ratings that they had assigned. And
what has S&P said about this so far?
Sure. So they've denied any wrongdoing. They've made it clear that they feel that the suit is unnecessary and wrong, and gone after the legal strategy the government appears to be employing here. So they're fighting it.
And on that legal strategy, I understand the government is using something that dates back to savings and loan cases, sort of a lower threshold to be able to go after them. What exactly is involved there?
Yeah, so they're looking at, so the suit is for fraud. So the legal strategy they're employing, again, is what came out of the savings and loan crisis. It's a way the government thinks they can get around the strong First Amendment protections that companies like S&P argue they should essentially overrule any accusations of fraud in this case.
The idea that they're saying this is just their opinion and
Correct.
Everyone's entitled to an opinion.
Correct. Yes.
And now, what is the next step now that this lawsuit has been announced?
Well, remains to be seen. I mean, again, it'll be a process that began last night when the suit was filed. What remains to be seen is whether any of the other ratings firms will be subject to similar complaints. It's also unclear from a corporate perspective what it means for S&P and their parent, McGraw-Hill. The company had set forth in motion this plan to split the company in two. The S&P business would have comprised a big chunk of one half of that. So there are some questions investors clearly have about what this means for that process.